Hello everyone. I'm Airav, and you are listening to the 721 episode of our Here and Now podcast. This is where we unpack the latest stories shaping the insurance industry. So, stay with me, because we've got some fascinating updates lined up. Let's get started. Our first story from Business Standard highlights that high-value health insurance policies are gaining popularity in India, especially after the government removed GST on them. On Policy Bazaar, the share of policies with a 1 crore rupees cover has jumped from 2% to nearly 12%. The reason is clear: medical costs are rising rapidly. Healthcare inflation runs at about 14% annually, meaning expenses double every 5 to 6 years. Treatments for critical illnesses such as cancer can already cost 30 to 70 lakh rupees in metro hospitals. Experts say families are opting for larger covers to protect against future risks. For example, someone who once found 50 lakh rupees coverage sufficient may now choose 1 crore rupees coverage. For those mindful of premium costs, combining a smaller base policy with a super top-up can be a smart and cost-effective way to secure higher coverage, even if the claims process may involve a few extra steps. Another approach is to gradually scale up coverage over time, which allows families to adjust premiums more comfortably, though it's important to be prepared in case an illness arises before the increase. Overall, opting for larger covers provides stronger financial protection, and the key lies in finding the right balance between safety and affordability. Our next story, again from Business Standard. The Indian government's new maritime insurance pool is already gaining traction. Less than a month after its launch on 18th April, insurers have committed over 1,100 crore rupees, according to officials. Backed by a sovereign guarantee of 12,980 crore rupees, equivalent to $1 billion at the time of approval, the pool enables Indian insurers to underwrite hull, cargo, and war risk cover for vessels trading with India, even through high-risk zones like the Strait of Hormuz. Here's how it works. Insurers contribute a portion of the premiums they collect into the pool. If a claim exceeds their capacity, the government steps in to cover the shortfall. This model mirrors frameworks in countries such as the UK, Japan, and South Korea, and forms part of Maritime India Vision 2030, which aims to strengthen India's shipping ecosystem. Premiums are currently on par with global players like Lloyd's, but rates are expected to decline as the pool's corpus expands. Crucially, payments are made in rupees, reducing foreign exchange outflow. The government is also planning an Indian Protection and Indemnity Club, led by the Shipping Corporation of India, to provide reinsurance support and lessen dependence on foreign underwriters. Together, these initiatives could make India's maritime trade more resilient and self-sufficient. Our third story from the Indian Express highlights a significant development. The Ayushman Bharat Pradhan Mantri Jan Arogya Yojana could soon be implemented in West Bengal, marking a major expansion of India's national health insurance program. The scheme would provide 5 lakh rupees annual coverage per family for hospitalization, potentially benefiting over 1.24 crore households, nearly 16 lakh senior citizens above 70 years, and thousands of frontline workers such as ASHA and Anganwadi staff. This rollout would offer financial protection against rising medical costs and reduce the burden of out-of-pocket healthcare spending for millions of families. West Bengal previously operated its own health insurance initiative, but integration with Ayushman Bharat would align the state with the national framework. To make the scheme more inclusive, provisions for co-branding have been introduced, allowing states to merge their existing health programs with Ayushman Bharat while retaining their identity. Similar models have already been adopted in other regions, strengthening the overall reach of the program. If implemented, this step is expected to improve healthcare access, enhance affordability, and contribute to the broader goal of building a robust social safety net across India. It reflects a growing emphasis on aligning state-level welfare measures with national priorities, ensuring citizens benefit from uniform and comprehensive health coverage. Our final story from Capgemini highlights the shifting dynamics of the global property and casualty insurance industry, driven by demographic change and rapid urbanization. By 2050, the world's population is projected to reach 9.66 billion, with senior citizens outnumbering youth for the first time. This aging trend, coupled with nearly 70% of people living in cities, will intensify risk concentration and reshape insurance demand. Healthcare costs, liability exposures, and property risks are expected to rise sharply, pushing insurers to rethink their strategies. The report notes that commercial lines are set to grow faster than personal lines, with premiums expanding at 4.4% annually compared to 3.3%. To stay resilient, insurers must embrace continuous transformation, investing in advanced underwriting, generative AI, and real-time data analytics, while balancing short-term profitability with long-term preparedness. In essence, Capgemini underscores that demographic and urban shifts are not just challenges but opportunities, and insurers that evolve continuously will be best positioned to thrive in the decades ahead. And with that, we conclude today's episode. We hope you found these in-depth updates helpful and insightful. As always, our podcast Here and Now will continue to bring you more stories from the world of insurance. Until then, take care, goodbye, and have a great week.